The crisis has not been cancelled, it has only been delayed. More stimulus and quantitative easing has only exacerbated the issue of way too much debt. This is a fundamental understanding of the central bankers and technocrats, which is why it must be an intentional action. But does anyone realize that fact? You came here for the truth, so let me unveil that for you. I have a very jam-packed episode, and I want to begin by talking about the tidal wave of distress. And that's a quote, believe it or not. So we're going to look at that. We're going to look at some more updates related to Archegos. We're going to talk about the S&P hitting 4,000 on its way to 10,000 and beyond, thanks to all of the stimulus and the quantitative easing devaluing the dollar. We're going to actually get into quite a bit here. No more ranting. Let's go. Before I get into the video, and always forevermore, remember this. Qui bono, or chi bono, the Latin term which roughly translates to who benefits or who stands to gain. And this is something that you should always keep in your mind in any situation, not just for what I'm talking about here, because we can look at who is basically the beneficiary of any particular action, and then you trace it back, sort of reverse engineer it, and things look a lot different. But you've got to keep an open mind, but you have to do what you're always told not to do, and that is color out of the lines, think outside the box. But for the average person, it can't be done. So can you? You thought I was kidding? Check out this Bloomberg article. Mortgage firms warn to prepare for a tidal wave of distress. That's their quote right here. CFPB says it may punish servicers that fail to help borrowers. Companies must act to prevent what they call avoidable foreclosures. Mortgage companies could face penalties if they don't take steps to prevent a deluge of foreclosures that threatens to hit the housing market later this year. This is an issue 2021. We're not talking about, later down the road, as in that whole debt issue. It is a problem, but they say that's something we can deal with later. This one right here, it's a 2021 issue. Everybody should have some insight as to what's happening. The Consumer Financial Protection Bureau warning is tied to forbearance relief that's allowed million of borrowers to delay their mortgage payments to avoid what the Bureau called avoidable foreclosures. When the relief lapses, mortgage servicers should start reaching out to affected homeowners now to advise them on ways that they can modify their loans. So essentially what we have for a lot of people is basically that they have this mortgage here. It's tied in at, just say a 30-year mortgage, and they can push that out even further. So they can add to the end of that mortgage. So if it was going to end in, let's say, 2030, now you can end it off in 2032, let's say. So they basically give them more time, but they push it on to the end of it. Now, I don't think that's necessarily going to fix anything, and the banks should, in my opinion, because there's millions of borrowers who are not making payments. You should see a very big gap in their accounting, even if everybody started to pay after. The question is, where is that? Where is that gap? We haven't really heard of anything. They're not getting the same amount of money they were before, the lenders. So what happened? That's a question. There is a tidal wave of distressed homeowners who need help. Servicers who put struggling families first have nothing to fear from our oversight, but we will hold accountable those who cause harm to homeowners and families. They're making, all these claims here, but anyway, that these agencies never really care about people, and we have to start asking the question, who exactly stands to gain from this? This is more about trying to make sure, a political action here. Anyway, I'm speculating regardless, but they really don't care about people. None of these agencies, we've seen that so many times before. More than 2 million borrowers as of January had either postponed their payments or failed to make them for at least 3 months. Once government authorized forbearance plans begin to end in September, hundreds of thousands of people may need assistance getting back on track. So they might just extend that again. But what does that do to the lender? What does that do to the landlord? There are a lot of questions that are still unanswered. The nation's hottest housing market? Surprise, it's Fresno. If you can believe it or not, this right here is one place that was hit hard for a period and now seems to be growing. A lot of the more, let's say, the hotter markets leading into 2019 were places like San Francisco and Manhattan. And then now you're seeing, because of those places were so, let's say, concentrated, and the prices were so high that has sort of flipped around, and the smaller towns and cities have seen a boom that is clearly unsustainable considering the conditions that are not quite the same as a big city. Bill payments jumped 30% as Americans used $1,400 stimulus checks to cover household expenses. Some people did that, but what this means to me, and they try to make it seem as if this is fantastic, it just shows me that people immediately needed that cash. It wasn't as if they took the money and they put it into the bank. They immediately went out to spend it. Many of these people were not paying, and still aren't paying, their mortgage and their rent. So what does that mean? Well, now they have this, let's say $1,000, $2,000, whatever the payment was, that they didn't have to pay throughout this period, so it can go to pay other things. That's why there's some people paying off their credit cards and so on. They're simply pushing that out as long as they can, and as a result, they have this income coming in. Okay, I'll pay off these different things with it, but I don't know. I think when you look at the bigger picture, we've got an issue that is not going to be covered by whatever the actions of the government are. Got some updates on what's happening with Archegos. Remember, whatever you hear, it's still speculation. That information hasn't come out yet, and we're just getting little tidbits. So remember that. Always remember that. Morgan Stanley and Goldman Sachs' role in volatility of Viacom CBS raised questions. Morgan Stanley and Goldman Sachs, two of the firms at the center of the Archegos unwinding, played a variety of roles before, during, and after the margin call. The plot continues to thicken, doesn't it? That is raising questions about whether the firms should have had a compliance function to intervene in their potentially conflicting roles in the same stock. So I don't have time to get into that, but I just want to note this because I'm going to continue to pay attention to it. There are a lot of other funds that are most likely involved in similar situations, and we will see them unravel. Billionaire at the center of a Wall Street fiasco gave millions to evangelical ministries. Of course, he's talking about Huang right here. If you want to read about it, I don't have too many details that I want to get into, but I think that if you're interested in looking into it a little deeper, this is one article to check out. Huang's family office built positions in at least 9 stocks that were big enough to rank him among the largest holders, fueled by a level of bank leverage that would have been unusual even for a hedge fund. Archegos was able to place outsized wagers using, guess what? Derivatives, and as a private firm, avoid the disclosures required of most investors. Almost invisibly, he accumulated a portfolio that some people familiar with his accounts estimate as much as $100 billion. Okay, within a very rapid period. How many other companies are in the same position? My guess is that there are many more than we'll ever know. As expected, the markets have been absolutely loving all the stimulus, loving the infrastructure plan. The S&P crossed 4,000. It's been taking a long time to get there. I'm just bored. I'm really bored waiting for 10,000 on the S&P. So whenever it gets to 10,000 on the S&P, please wake me up from my slumber. Here you can see the technical analysis. I've got some information to show you. You're looking at particularly these different valuation metrics. You're seeing these on chart form. You see them in graphs. You look at it in all different ways, but it is very clear that we are overvalued on basically everything. I mean, there's very few things that you can look at today that would, measured properly, I should say, that, we've never been in this territory before. Now, generally what that means is, quite frankly, the bigger they are, the harder they fall. And that's been really present historically. You see that. The further and faster that it goes up, the harder and faster it falls. The question is what actually triggers that? This is an issue that I've been bringing up on previous videos, but it is quite worrisome to see the failure over and over again by those that are supposedly in charge. Market cycles. S&P 500's bull markets tend to last more than 2 years, and they're going and trying to predict, where exactly does the bull begin and end? Was what happened in early 2020 really a bear market, or is it simply a very long bull market from 2009 and on? That's questionable. And some people see what happened, after this period as being the start of a new one, and for different reasons because of all the stimulus and so on. Quite frankly, especially since 2008-9 timeframe, nothing seems to matter anymore. But if you see the way that these analysts look at it and articles are written about it and it's on TV, it's all over the place. Quote, "It's psychology. Confidence builds over months and years. The emotional journey from denial to acceptance to euphoria is long. Momentum builds slowly in the economy too. Ultimately, the market follows the economy, and the real economy is like an ocean-going vessel. It takes miles for an ocean-going vessel to actually turn around, and it's the same for the economy." Now, that is the most ridiculous thing, not factoring in the reason why the market has moved up. Let's be very clear and let's be honest. And now for some news that absolutely nobody cares about anymore. Debt is up $1 trillion in the first 6 months of fiscal 2021. How do you pay for all of that? Well, of course, you increase taxes. Don't worry, it's going to be on the rich. Supposedly, that's what they say anyway. And you can see here that the new administration wants to raise the corporate rate back up to 28%. But that's the least of the proposals. He also wants to add penalties that would make inversions punitive, and he'd impose a global minimum corporate tax of 21%. This would shoot the tax burden on U.S. companies back toward the top of the developed world list. At least 9 major countries have cut their corporate tax rates since 2017. The U.S. is working with the IMF to provide $650 billion in currency aid to countries that have been hit hard over the last year. I find this very strange. I find it unusual. Number one, it's quite late now. Why now? But at the same time, we have to understand, especially when we see the IMF, who stands to gain? And that's a big question, because when the IMF is out to play, we should be very, very worried. Confessions of an Economic Hitman, fantastic book, talking about some of this, of course, and even Vulture's Picnic is another one. If you haven't read that, I mean, it's been years. I believe the author's last name is Palast, Greg Palast, I think it is. Another great one that people should be aware of. This particular mall owner, who I can't pronounce if my life depended on it, basically right here announced it sold a majority stake in Paradise Valley Mall in Phoenix to a mixed-use real estate developer. And this could be something that becomes a trend. It would be a good trend, I believe. And you go from something like a mall that nobody needs anymore, you rezone it, and you turn it into, as they say here, 92 100-acre site has been rezoned to create a new community with homes and offices. Malls full of clothing and other retail shops looking for new life. Coreside research estimated that 25% of America's roughly 1,000 malls will close by 2025. So you got these big facilities. They could rezone them. They could make them housing. They could make it a little bit of retail. They could make it office all in one. And that could function as its own little ecosystem and might revive a lot of these places that are simply going down the drain. Who stands to gain, I said, right? Some of America's wealthiest hospital systems ended up even richer thanks to federal bailouts. That's right, your tax dollars going out to bail out the richest of the rich in every single category. This could potentially bring a little bit of downward pressure on oil, or at least keep it from rising so quickly. But OPEC and allies agreed to boost output, betting on demand rebound. So if there definitely is more and more demand, that's going to require more pumping. They have agreed to do that somewhat over the next little while. So if that continues, of course, that price could be less, let's say, aggressively rising over the period. Last time I checked, it was around $60 a barrel. And of course, this is good for the companies that are doing this, the countries that are exporting it, but not so good for those who have to pay for gasoline and of course everything that's being shipping around. That's going to cost money in general. That's all for this video. If you found it informative, hit that thumbs up button. If you made it to the end of this one, congratulations. It was a long one, a lot of detail, but I wanted to get in as much as I could. So if you want to learn about e-commerce, you can do that at my website for free, the AmazonGPS.com. If you have not checked out my 2 books, right at the link in the description, you can actually flip through the pages of them for yourself. Just go down there, click it, and you'll be able to just take a look through. And if you want the audiobook, that's available at themoneygps.com. If you haven't seen this video yet, you definitely want to check it out. Click it, and I'll see you there.